In this video, we're going to talk about how to identify trend ranges and how to trade trend ranges following price action rules. This is important. We're not going to be relying on any indicators. We're going to be trading trend ranges in its pure form using price action rules so we can identify high probability setups and we understand the behavior of trend ranges. Trend range can be fairly easily identified. As you can see, this is pretty typical trend range structure right from the beginning of today's session. This black line divides today's session from the previous day session, and we can see already a lot of price swings swinging up and down through the exponential moving average, and this 21 bar EMA, which is supportive indicator, is working completely flat. It's not pointing up, it's not pointing down, it's flat for the most part. So this is a clear indecision, clear sideways structure. Both bulls and bears believe it is a good place to place trades. Now there are a couple of rules that we need to follow while we're trading trend ranges. Number one, we generally want to buy low, sell high, and two, most breakouts will fail. And you can see we have the support here, which is important key level, which we always have to identify if you want to follow the rules in trend ranges correctly. And here we have the high of the day resistance. You can see how nicely prices are oscillating between these key levels. Notice prices broke off this low and instantly pulled back into the trend range. That's because most breakouts will fail. Notice prices broke higher and they pull back into the trend range. Most breakouts will fail, at least temporarily. Of course, we're going to go through the chart to talk about why it is okay to fade a breakout here, why it's not the best to fade a breakout here, etc. And you can see the trend range keeps developing as the day goes on. Eventually, you break higher, but you eventually pull back into this trend range back again. But we're going to go through the chart and follow the price action rules. Now, you can also see that on the chart, I have drawn a bunch of trend lines, and it is by design because in price action, the patterns are never naked and alone on a chart. They're always following some form of a pattern, and these trend lines follow a trend line rule which says after break of a channel, we expect for prices to retest new extreme. So let's start from the very beginning, because from this point on, this is basically where the stock market opened. The regular US stock market opened at this point on, and notice prices are bouncing off this important key level, which is as expected in trend range structure. We're pushing above EMA, so at this point on, my short-term bias in this market remains bullish because we're bouncing off to these lows. We're already pushing above EMA, which is indicating signs of bullish momentum, and my bias is for the most part bullish. Notice this was the lowest low where I can reset my count, because at this point on, I need to count for entries. If I want to identify high probability setup, I need to understand how prices move. Prices move in form of a two-legged pullback. And if I want to identify two-legged pullback, I need to count properly. So this is the lowest low where we set the count. We have first entry short, pullback, second entry short. Now we're not looking for second entry short to work because bias is bullish and we're above EMA and we're bouncing off to these lows. So as the prices are pushing higher, at this point on, I'm expecting a failed second entry short, which this second entry short failed right here once this big bullish bar forms. So this right here is considered a failed second entry short. However, we cannot really enter this bar because notice how big this bar is. The risk to reward is really not favorable. You would be risking too much. So this is one of those trades where unfortunately we have to sit on our hands and not take this trade because it's just too big. Prices move too far up, and at this point on, we can't really enter this trade, but bias remains bullish. Now notice what we have. We have a new high here. We have a first entry long, pullback, second entry long. Now this right here, the area at this point on gets pretty stacked, but this was my first trade for the day. I took it as a second entry long because second entry long is a high probability setup if the structure is bullish, and the short-term structure at this point on is fairly bullish because this uptrend needs to get new extreme according to trendline rules. This is why I'm drawing these channels on the chart, because they keep me on the right side of the market at least temporarily. So this right here is a two-legged pullback, second entry long. It worked for 10 ticks. I got my 8 tick scalp, so you can see this is a benefit of being a scalper. Sometimes you can take your scalp and have a winning trade even if you don't perfectly time it. But this is a little bit more aggressive because it is an inside bar of this bar. You're working a little bit sideways, so definitely okay to be more patient at this point. Notice you can see congestion here, which pretty much flat EMA, a lot of bars staying next to each other. We can't really take entry in the middle of this congestion. It is too risky, and this uptrend still needs to get new extreme. Prices created new extreme, and notice market likes to move in pairs of twos. We have first leg up, pull back, second leg up. So now that I see that we have a new extreme for this uptrend, it is a larger visual to like a correction. In trading ranges, I'm not looking for any wider pattern like this. Especially in trading ranges, I'm following the visual to like a pullback. If it looks visually like a 2 legs, I'm satisfied with it and I consider the uptrend played out. For this reason, notice we have a strong big bearish push back below EMA, and this is important because uptrend played out. We're at the highs of a trading range and the resistance can be a little bit lower like this. You guys can see if I just drag it a little bit lower, we're basically confirming it. Doesn't really matter, you don't have to be perfect, you have to be close. But I see that uptrend played out, strong push below EMA. If I'm gonna come from this low, we have first entry short, second entry short, strong push below EMA, and we have a lower high. What does this lower high confirm? It confirms the prior second entry short. So this right here is a great high probability setup because it is right near the EMA and a great signal bar. A very, very signal bar. Prices haven't moved too far down. Once you see lower high and or high low really forming close to EMA without moving too far, so you don't have to chase it, that's a good sign. And when combined to like a pullback depleted the bullish momentum, we are entering a structure, so expect quick snapback. That's the whole point. No matter how bullish the prices look, this is the second leg, push below EMA, and in triangle structure you expect the quick reversal. When I was watching this, I really wanted to see the trap. And notice price continue pushing below EMA, which means I can redraw a brand new downtrend now because the bearish momentum is continuing and we have new high, first entry long, pullback, second entry long. This was my second trade for the day. I managed to get 2 trades right off the gate, and you guys can see failed second entry long. We're counting for longs, not because we want to go long, but because we want to see these second entry longs to fail, because bias is right now short and bearish. We're below EMA, and notice the signal bar once again, tick up or tick higher, instant reverse down, great failed second entry long, and we expect for prices to reach this low. Okay, downtrend is being followed. We have a break, close outside, so we have a push to a new extreme, which means according to trendline rules, we expect correction or reversal. This is why at this point on, we can consider failing the breakout. Now, this is not the great breakout setup just yet. The signal bar is not great and didn't really set up properly, but this is how you're playing the triangle structure. Once you're below the important key level, remember, most breakouts will fail according to price action rules. So if you combine the price action rule when it comes to trend ranges, then most breakouts will fail, and you combine it with the trend line rule that you have a break and a new extreme, you got 2 price action rules indicating to you that it's probably time for market pulling back into the trend range. Okay, so I'm going to redraw the short-term correction like this. Notice we have a big bullish spike above EMA, and we have very similar scenario like we had here, but vice versa for the bullish momentum. Downtrend played out, we're back above EMA, we're confirming the support again, and this right here is high-low confirmation setup. What does this high-low confirm? It confirms the failed breakout. High lows, lower highs are confirmation setups mainly. So you want to take them specifically if you're confirming some high probability setup that formed prior. So here we confirmed the second entry short, and here you're confirming the failed breakout. You pushed above EMA, so you got confirmation of the bullish momentum, and notice you're right at the EMA. You're even confirming the support. Decent signal bar, decent high probability setup to take high low, because you're expecting for prices right now to go from these lows back to these highs, because you want to buy low and sell high as the trend range rule says. Now, notice we have a break and a new extreme. For this reason, I'm not particularly looking for failed second entry short. We have new low, first entry short, pullback, second entry short, failure. Okay, notice the uptrend already played out with the break and new extreme. So this is why there's time for a longer correction. And also notice by the time this failed second entry short forms, it's already a little bit too stacked. You got doji prior, it's a little bit congested. I really don't like going long here. You need to be patient. If you took it right here as a failed second entry short, you know, I can see why you're following the context correctly, but sometimes in price action, you need to time it well. And notice how this setup is not congested, how these two setups are not congested. And here you can see it's part of the small congestion. This is why sometimes it can happen. This is why we respect the congestion. If you took it, you know, you didn't really do that much wrong. You just didn't time it properly. You were just a little bit too anxious to enter because you just got stopped out before market eventually continue working higher. But there's congestion here, which I don't really like entering. And the fact that we have a break and new high, yeah, I definitely want to be a little bit more patient here. But notice what happened. This is what it's called a spike and a channel pattern, because we have 4 consecutive bullish bars without a pullback as one spike, and we have a consolidation, we have a flag right after this bullish spike. And once you see spike and a flag, that's a lot of times how you're going to have a channel set up. There's also a possibility for me to draw wider pattern, something like this, but I really like playing the spike and a channel because I saw spike, consolidation around EMA, congestion, which a lot of times will help you set up the channel. And you can see once we get the confirmation here, this is where I adjusted. At first I was playing overshoot like this, but you can see it got another overshoot and another overshoot, and this tells you that the overshoot is not valid, because overshoot is supposed to be one-time activity, one-time overbought situation, and you're supposed to pull back and snap back instantly. Once you have so many overshoots, there's probably a larger two-tier pattern, so I adjusted it a little bit. Now we have multiple confirmations. Here's the important situation to watch for. Notice from the very failed breakout, from this low, we haven't closed above EMA once. Rejection here, rejection here, rejection here, rejection here, all the way up to this failed breakout. Prices are being rejected by the EMA. This is important because this is one of the clues that can help you to stay away from fading the breakout. Not only we don't want to fade the breakout here because the uptrend is in play. Notice the downtrend here played out with the break new low. So it is okay for us to start buying. Here, the spike and the channel is still in play. It still doesn't have a break, still doesn't have a new extreme. I cannot fade the breakout here. I cannot sell the breakout here. Okay, and also if you're going to combine so many EMA rejections, if you come from a failed breakout and you see so many rejections, because failed breakout can sometimes generate strong momentum in opposite direction, this is a good clue that the trend, the bullish trend, is probably stronger. So at this point on, I'm expecting to take a second entry long at the key entry point, but I don't get second entry long. I only get first entry long here, new high, first entry long, second entry long. Yes, the second entry long forms here, but it is far away from EMA. It is bearish bar, counter entities, and now we have overshoot. Now I don't want to extend it like this again. Why I don't want to do that? Well, because I have no confirmations here. This trend line is basically hanging in the air like this. Whether if I put it here, I get multiple confirmations here, this trend line fits better. So this is regular overshoot. This can happen depletion at the top of the move. An overshoot means that we can have break of a channel or probably even straight up reversal. Now reversal wouldn't be uncommon because remember, we were in a trend range, so we have a chance that we will pull back lower. And lo and behold, notice we have a strong bearish push down. And this is where it started to get a little bit confusing, because as I was watching this downtrend working lower, I was leaning more towards prices creating a new low for this downtrend and possibly going back into a trend range. Okay, now of course we can see what happened to the right, but when you're watching this live and you see such a massive leg down combined with the overshoot, I'm expecting for prices to continue working lower. But notice what happened. We instantly push back above this important key level and back above the EMA. So once I see this high low and I see 2 more bullish bars, I'm suddenly shifting my bias, and now I expect for prices to form a new extreme for this uptrend. So once I see prices pushing above EMA here, at this point on, this is where I expect to get a failed second entry short, because the bullish bias is resuming. We need to get new high and we have new low. First entry short, pullback, second entry short failure, but notice EMA didn't hold, and the failed second entry short signal bar is a horrible bar with such a bearish stem at the top. I can't really enter this. So even though we have contextual failed second entry short, it's set up so bad that we can't really afford to take this setup. You have a break new high. Prices continue working lower, and now it gets really confusing. This is where you have to be really patient, because EMA got flat again. It's getting in the middle of these bars. It's getting 2 sideways, indecision. You know, are you going to pull back into a trend range? Are you going to make new high? You know, 2 conflicting patterns, and it's really hard to decide what's going to happen. You just really have to be only taking setups where you feel comfortable. After we pushed above EMA here, it looked like we may create finally new high for this uptrend. So once I was watching this area right here, I was really leaning more towards prices creating new high, but we instantly reversed back below this key level. Okay, so this is important. Once I see so many highs being rejected, this is where I drew this micro resistance again, because we can't deny that we're having reaction here, and reaction here. Okay, and this is how you're reading the price action. You're working with what the price action is giving you. I cannot argue with it. I see multiple rejections here, so I'm just going to draw it so I'm aware of the structure. And now that we're finally reversing back below EMA and below this resistance again, now there's a chance that we're going to follow the trend range rule and we're going to revert back into a trend range. And notice what we have: new high, first entry long, pullback, second entry long, failure. This right here is a failed second entry long. You're below EMA, you're below the trend line, but even if you don't have a trend line, notice you're back below this important key level. It acted as a resistance here, it acted as a support here, and now it's acting as a resistance again. Little smaller breakout pullback, decent bearish bar. So we have 3 key entry points, failed second entry long. Now when I was watching this, I was really patient here because it looked so back and forth. I didn't really want to risk any setup, but in hindsight, this is mainly a hindsight trade from my perspective. If you're reading the structure correctly here, what's going on here, and you see such a strong bearish rejection below EMA, this is nice, failed second entry long to take advantage of, and prices reverse all the way back down. Okay, so we have a brand new structure working to the downside, a very strong downtrend. Of course, I always need to identify my pattern because you can see in these trend ranges, price action is following these patterns. And by the way, we didn't get new high for this uptrend, but it's okay, we have overshoot. And remember, overshoot can generate strong momentum in opposite direction, which means we may not sometimes create new extreme. So if you're going to combine the overshoot with the fact that we are in a trend range and most breakouts will fail, notice the breakout eventually failed and pulled back in the trend range. No surprise we don't have new extreme. So this is why you have to be a little bit open-minded. If we have one try here to make new high, pull back, second try here, big, 2 larger pushes to create new high, and we see prices are struggling to create new high, I cannot argue with it. I have to follow the rules and the short-term bias, which is right now bearish. Okay, we have a break right here. We have first entry short, pullback, second entry short. I cannot take second entry short. Why? Because this option is in play and may get new extreme. And also, you're not touching the exponential moving average. So the bias is down. I expect new low, and I'm looking for high probability setup to sell, which is second entry short to like a pullback, which I have second entry short. But remember, short-term option is in play. It's not at the EMA, and once it's not at the EMA, what can form? Possible double trap. But double trap that formed, notice, really didn't form that well because of a break, new extreme. Okay, this is good. This is indicating the bullish momentum played out. I have double trap at this point on, which means early sellers got trapped because they're selling far away from EMA while this option is in play, and early bulls who are reversing market too quickly are going to get trapped as well. But double trap, just like any other high probability setup, needs to have great signal bar. If I'm selling, I need to sell below bearish bar. I cannot sell below bullish doji like this. So there is no setup. Follow-up bar was bad bar as well. Notice half of this bar is a stem at the bottom. So it's getting stacked, getting congested. No real way for me to enter. It looked very bearish at one point. It looked very hopeful for double trap. It never formed. Market just continue pushing lower, but there is no way to enter. And market reverse. And this is important because this was not supposed to happen. We were supposed to get new extreme for the downtrend. We were supposed to retest the low, and we have such a strong push above EMA. This is indicating that something is changing. There's more buyers at this support buying low according to trend range rules, and you need to switch the gears. I'm looking to sell because we're now back above EMA. This setup didn't really push to new extreme. Strong rejection above EMA, so I can't really sell. I can only sell if we push back below EMA and get something like lower high or failed second entry long. Okay, so we can see that we have strong bullish push to the upside. So what I have to do at this point on, once I'm watching this rally to the upside, what I have to do according to price action rules to stay on the right side of the market, well, I need to redraw the channel to find some pattern. I can either find channel like this, which is not wrong, but I can also see that this move was quite big. This is not tiny structure like this trend down, this trend up, this trend down, this trend up. This is quite a substantial move already. From the very low here, we're already breaking the trend range again. I can also look for a wider channel. Notice if I'm gonna connect these first two swings, first swing, second swing, third swing confirmation. So this is confirming that there is a valid bullish channel right out to these lows. So once I see a new high here, I'm counting for second entry longs. Why? Well, because structure is bullish. We need to get new extreme. Or if you're playing this wider channel is in play, and you have new high, first entry long, pullback. We get micro second entry long here as an engulfing entry. But this is such a tiny little break. Once I saw this bar forming, I basically considered this as a second entry long visually. New high, kind of like a first entry long, pullback, second entry long. You can treat this as a second entry long, engulfing, and basically consider this high low. But visually, this is a first entry long, second entry long. Notice EMA keeps holding. The trend line you identify early using these first three swings market geometry, you can see that these channels are not random and they're not subjective at all. This is all indicating to you there is going to be a channel, and also this key level that you identify at the very beginning of the session is still coming into play and showing you signs of support. So this is what price action trading is about. You're reading the price action, you're learning to understand the price action, what it's telling you, and here we have second entry long, high probability setup, 3 key entry points. This setup unfortunately could not have been entered because, well, it's getting a little bit big, but it's not such a big of a problem. It basically gapped up instantly and reached the scalp without prices even pulling back. So you have no chance to get in this trade unless you use stop order and price managed to create a quick, easy scalp and market reversed. Now notice, one trader asked me about taking this lower high as a confirmation of a failed second entry long because we have a new high, first entry long, second entry long failure, and here we have lower high. Can we take this lower high? We cannot. Why? Because this uptrend needs to get new extreme. If you are unsure about this uptrend here, you have to respect the uptrend here because we have fourth confirmation of this uptrend, which is important. This is confirming the channel. So I need to get first new extreme, and just like here, we cannot really fade the breakout as long as this channel is in play. Same thing right here. We cannot expect for prices to go back into trend range as long as this bullish momentum is strong, and we may get potentially new extreme. And also notice that this lower high is quite far away from the EMA, not really touching it with the body. And notice the leg down already happened. So this is not the lower high like this when you're right below the EMA after you push shortly below it. Here you already pushed way too far down and kind of like the bearish move already formed, so it's way too late. And you can consider this way too late because the main short-term bias right now is bullish, so this is not a great lower high to take, okay? In fact, we're looking for a new extreme. Now we have new low, we have high low here, which is confirming second entry long because I can reset the count here because I have a new high, first entry long, second entry long failure. So I'm going to reset the count again, first entry long, second entry long, and I have high low confirmation of this second entry long right here. Second entry long here, and I get high low right here. Now it is gigantic, so I can't really enter this. It's also a little bit stacked. Don't really like this setup too much. You know, context wise, it makes sense. You really want to see failed second entry short. If you get failed second entry short here, first entry short, second entry short failure, that will be great setup right near the EMA, expecting new high. You know, this high low, you know, notice how it's getting a little bit stacked. You expect new high, so decent setup context wise, but it's definitely set up too big. And you get new extreme, so at this point on you hold all the long setups. You can't really take any long. I would expect longer correction back into trend range because there is right now no reason for me to expect bullish momentum. We have a break new high. We have an overall trend range structure. We're pulling back. So I was quite surprised we reversed instantly back up again. But there's nothing much I can do. I just follow the price action. There is no high probability setup. I have new high, first entry long, second entry long, count reset, first entry long. I was expecting to get a failed second entry long here because now we have two major legs to new extreme of this uptrend, and I'm overall in a trend range structure. But we only have a lower high here and we have push above EMA. And now we have confirmation of the bullish momentum. However, 1, 2, 3, 4, 5, 6 bars stacked, EMA in all these bars, and another push back up. And this is where it gets a little bit confusing because normally you would consider this quite a bullish bias because we have so many high lows and so many high highs. But remember, we are in an overall trend range structure. Notice the entire day is pure sideways movement, back and forth, which means I cannot redraw channel wide like this. Okay, that's not what I want to do. And this is pretty typical pattern. It's called a second leg out of the trend range. Notice visually we have first move, sideways structure, second move, and in trend ranges, once you see this visual two-legged pullback, there is a chance that prices will pull back lower into a trend range. So I'm leaning more towards prices reversing down. But I'll be honest, this was quite confusing because you really kept over pushing it. It looked quite bullish. Market really didn't reverse that quickly. So I was not really sure what's going on here. It looked too bullish, but at the same time, gut feeling is telling you may reverse down. I was even expecting possible failed second entry short here as you push back above EMA here. But once you see prices reversing this far down, this is basically where you have to take a step back, understand that you're entering in structure. This looks like a visual two-legged move, and once you're already reversing back down, you expect for this breakout to fail and for prices to go back into trend range again. So when I was watching this, I was looking for any channel, something like this, because I expect for prices to go all the way down. Now that didn't happen. Market created a last push up before eventually sold off. So there is this wider pattern you can see generated a strong momentum. Market is pushing lower, so at this point on, bias is bearish. That means I'm looking for high probability setups to sell. Second entry short, we have new low. First entry short, pullback. Second entry short. Right here, you can enter using this inside bar. A little bit aggressive because you're entering on inside bar. But notice so many rejections of EMA. You're most likely going to reach the low of the day. I wouldn't have this channel at this time. You have new high, you have a lower high here, but it's a horrible bullish bar. I can't sell. I definitely cannot sell below this big bearish bar. Can't reset here, so only a first entry short. And at that point on, market is already about to close and it's too late to trade where you can identify there is additional pattern like this. This is the overall picture for the day, and this is how we're supposed to be approaching trading range structure. I'm going to talk to you next time.